Welcome everyone to the Michigan Historic Preservation Network December webinar. My name is Xiaohan Bao Smith, and our topic today is about the State Historic Preservation Income Tax Credit. And before we get started, I will like to go over some Zoom tips. If you have any questions, please type them into the Q&A box as you think of them. All the questions will be answered at the end of the presentation. And today we will not be answering any project-specific questions. If you have any questions, like a general question, we will be answering that. But if you have a specific question about your project, Mara will be available for you afterwards. And the chat box will be used to share any links and resources discussed during the webinar. This webinar will be recorded. The recording will be available in the next few days. So, and you will be receiving an email when it is available. If it's your first time attending our webinar, we are the Michigan Historic Preservation Network. We advocate for Michigan's historic places to contribute to our economic vitality, sense of place, and connection to the past. We could not do the work we do without our members and volunteers. If you are not a member yet, please consider joining us at www.mhpn.org. Our webinar series is supported in part by an award from the Michigan Arts and Culture Council. And it is my great pleasure to introduce you our speaker today, Mara Lancaster. Mara recently joined the State Historic Preservation Office in the position of historical architect. A native Michigander, Mara spent the past 20 years in private practice with architecture firms around the Midwest, primarily focusing on rehabilitation of historic buildings. Her project experience ranges from relocating an historic barn to restoring a presidential site and everything in between. Outside of preservation, Mara enjoys reading, gardening, and traveling with her family. So with that, I am going to turn it over to Mara.
Share screen. Right. Hello, everybody. Thank you for joining us today. I'm excited to share with you some information about the State Historic Preservation Income Tax Credit. I think we are going to try to do a poll here at the beginning, and please bear with us. We'd like to know how many are residential applicants and how many are commercial applicants, and that way I can kind of gear my presentation towards what our audience is. And it's looking pretty split. All right. So, all right, we've got about half and half. So I will try and cover both the residential and the commercial requirements evenly. So thank you for answering that. All right. So the State Historic Tax Credit Program, this new version of the program started, it was enacted at the end of 2020. And if you're interested in reading the legalese of it, you can find that at the link here on the screen. It took about a year to develop the rules and the process. So we began accepting applications in 2022. The goal of the program is to encourage the rehabilitation of recognized historic buildings. And the program offers a tax credit of equal to 25% of qualified rehabilitation expenses that are spent on renovating and restoring historic properties. So it is a new program. If you were familiar, there was a previous state tax credit program that ended a little over a decade ago. This one is similar, but it does have its own differences. So it is an entirely new program. There is $5 million allocated each year for tax credits, and those are divided into three categories. There is $2 million available for large commercial projects, $2 million for small commercial projects, and $1 million for owner-occupied residential properties. And the difference between a large commercial and a small commercial is the amount of qualified rehabilitation expenses. So if you have, if you're planning to spend $2 million or less on your project, then that would be a small commercial project. Over $2 million is considered large commercial. The program does allow for a 1-year reach back to include prior completed work. So if you're just finding out about this application and you have work that was done in the past year, it may be eligible for the program. It can be combined with other credits. So if you're eligible for the federal historic tax credit program, you can use both programs together, or there are other credits and funding opportunities available out there, and they can be used concurrently with the historic tax credits. Each property can use the tax credit more than once, although you can only have one application open at a given time. So if you do work now and then 5 years down the line, you want to do another project, you may reapply. And then the tax credit may be used by the same owner more than once at multiple properties. So if you own a number of commercial properties, you may apply for projects at each property all at the same time if you'd like. In order to be eligible, a building must be a certified historic structure, and I'll go into a little more of what that means on the next slide. The project must be a substantial rehabilitation. So the amount of qualified expenditures that you have for the project, if you're a commercial project, you need to spend at least 10% of the state equalized value in order to be considered substantial. And if you are a residential property, the threshold is currently at a minimum of $1,136, and that amount is adjusted annually based on inflation. So this is the 2023 number. The 2024 minimum will be established in January when the December inflation data comes in. All work on the project must comply with the Secretary of the Interior standards for rehabilitation. Those are the standards by which we evaluate all of the proposals, all of the applications. I could go into a whole presentation just on the Secretary of the Interior standards, so I'm not going to dig into those today, but you can Google for them, and I will have a link on the last slide of my presentation to take you there also if you would like to read more about those. The tax credit program is available to both commercial properties and owner-occupied properties, although right now the rules are such that it cannot be both. So if you have a property that is both commercial and you live there, then unfortunately the rules do not allow for those applications at this time. And in order to apply, you must either own the property or be a long-term lessee. And that means if you're a residential property that you are leasing for 27.5 years at least, and if it's a non-residential commercial property, your lease has to be at least 31.5 years long. A certified historic structure means a structure that is individually listed or contributing to a district on the National Register of Historic Places or on the state register, or contributing to a local historic district. So this is different from the federal application in that properties that are contributing to local historic districts are eligible for the tax credit. We do want to make sure that your local historic district is compliant with PA 169. There are a few out there in the state that are not, but the majority are. So please do confirm that before you apply. The qualified rehabilitation expenses that I mentioned earlier. So the amount of money that you spend on your project, the grand total is probably going to be larger than the amount that is considered qualified rehabilitation expenses. Things that are eligible to include in that amount are capital costs of renovation. So that is everything basically within the footprint of the building, anything you do to the exterior walls and in from there. So mechanical systems, plumbing, roof replacement, painting, renovating kitchens, bathrooms, all of those types of expenses count as eligible. Some soft costs do also count. So professional fees, if you have an architect or a structural engineer, for example, some developer fees and permit fees are also eligible expenses. Things that are not eligible are acquisition of the property, any furnishings or appliances within the building. So anything that isn't permanently attached to the structure is not considered eligible. Any additions to the building or any site work, say you're adding a parking lot or landscaping to the exterior, those are not eligible. And then non-historic decks are not eligible. Historic porches are still included, that's fine, but if it's something that has been added after the period of significance, then it is not typically eligible. All of the qualified rehabilitation expenses, those definitions are set by the IRS and the Department of Treasury. So if you are interested in if your work is eligible or not, that is something to discuss with your accountant or tax professional. Right. The application process, it is parallel to the federal tax credit process in that it has 3 parts. The first part is to determine the historic significance. The second part is to review the proposed rehabilitation work for compliance with the Secretary of the Interior standards. And then the third part is to verify that the work was performed the way you said you were going to do it in part 2. So I will go through each of these parts in a little more depth and talk about some of the supplemental information that is requested with each of those parts. So the part 1, again, is to establish that it is a historic resource, that it's individually listed or contributing to a district. We do ask for a description of the resource and a statement of its significance. If you're only in a local district, then we do ask for a declaration of location form. That's so that your local district can verify that the building is included as contributing. We ask for a proof of ownership document, such as a deed or a recent tax bill, or if you're a lessee, then a copy of your lease. We ask for an identification map, similar to what's shown on the side of the screen here, that would show the boundaries of your historic district and the location of your property within the district. And this map, often your local historic district commission or your city will have this information available on their website. So you can access the map there. You don't necessarily need to create it yourself, but we do ask that you put some sort of identifying mark on your property. It can be highlighted or a red dot, something to identify where your property is within the district. We do ask for photographs. For part 1, we are looking for overall exterior and interior photographs that are taken before any work is performed. So if you're using that 1-year reach back, we do ask that you include photos from before you started any of that work. And the reason for this is we want to establish that the property retains its historic character, that it hasn't been modified drastically since it was listed as contributing. And if you have any historic photos, if they're available, we ask that you include those too. Those are helpful for our review. And the last item that is requested with the part 1 is a photo key plan, which is a plan or diagram of your house, like a floor plan or a site plan, where you put dots to locate where you took the pictures And that really helps us to understand what each fixture is looking at. This is what the applications look like, and I'm not going to go through every line item, but I do want to hit a few things that have been commonly, that seem to be a common source of confusion. The first here is the first line, the historic property name. Not all properties will have a historic property name. So if you do not have one or you do not know what yours is, it's okay to leave this blank and just use your address. The second here is the name of your local unit of government. So this would be your city or township, the municipality that you live in, City of Detroit or Grand Rapids Township. We want you to list that they're basically the government entity where you pay your taxes. All of the forms are totally fillable PDFs, editable. So when you download them from our website, we do suggest that you download it and save it to your computer first, and then open it up through your PDF reader program, and that will provide you the most functionality with all of the features. Because the editable PDFs will only allow you to select one of these three categories. So it's important that you open it properly so that you can select the proper category that you're applying for here. And then if you are checking this third box down here as being in a local historic district, we also ask that you check the box that you're including the declaration of location form that's required. All three parts of the application do require a wet signature, so an actual sign and ink signature, not a digital signature, not a verified signature. We do ask that you print the form out and sign it by hand. And the project contact section here, you only need to fill this out if someone other than the homeowner is preparing the application and you want us to contact that person instead of you if we have questions about the application. So this is for projects that are utilizing a consultant, where you've hired a consultant, you would list your consultant name here. Or if, say, a family member is helping you and you would rather that we contact the family member for additional information, you can put their information here. But please don't list your contractor unless you want us to talk to them about your application instead of you. Page 2 of the Part 1 application, we ask that you fill out up here the amount of your application fee, and then to indicate which category you are applying under. For 2024, I do want to highlight that we will only be accepting applications for the owner-occupied residential category and the small commercial category. We received so many applications in 2022 that the funds have been allocated for the large commercial all the way through 2024. We don't expect accepting applications for that category until January of 2025. Below the line is all for our use, and this is what we will fill out and return to you when the application, after it's been reviewed. All right, this is where you will describe your physical appearance and your statement of significance of your property. There are samples of this in the instructions document that's available on our website. So please do refer to that if you need some guidance on what to include in these sections. And you may not have to recreate this information. I would suggest that you look to your National Register nomination or your local Historic District Study Committee report. There may already be summaries of your property in those documents. So please do look there first before you spend a lot of time recreating those. And then this is the declaration of location form. So this is just for properties that are in a locally designated district only. These do need to be filled out and then signed by an official representative of your local unit of government. So typically this would be a person such as a preservation planner or historic preservation coordinator, historic district coordinator. The titles vary between municipalities. And it doesn't have to be that person. That's just typically who I have seen signing these documents. All right, for the photos that we request, and we do request photos at each of the 3 application parts, we do request that hard copy photos be sent as well as digital copies of the photos. The hard copies, we have some minimum size requirements. They have to be at least 4 inches by 6 inches. And they do have to be printed on photo quality paper. So no just regular photocopy paper pages for the photos. We have identification information for each of those photos that we would like to be labeled on each photo. And then the photos can be printed at 4 by 6 size or larger. This is just a minimum. And it can be from a photo lab or a printing company, such as like a FedEx Kinko's, or you can print them yourself if you have the capabilities, if your printer is a high enough quality to give really good legible photos. For the digital photos, we do ask that they all be formatted into one PDF document. So using a Word document to assemble all the photos, or a PowerPoint type document, something where you put all of the photos together into one PDF and include the same labeling information next to each photo. And again, all of this is in the instructions document that is available online. So please do refer to that when you are preparing your photos. The photo key that I mentioned earlier, the floor plan or diagram of your house, we ask for this so that we can understand what we're looking at in all of the photos. And this really does help when we're comparing before and after photos, because sometimes the renovations are so drastic that looking at the after photos, we can't tell where it was looking before the project versus after the project. If you have an existing plan of your house, it's okay to go ahead and use that. This is like a survey or a plot plan that the applicant has just written on with arrows and the photo numbers. If you have the capability to do it digitally and add a symbol in there with a number to show us which way the photos are looking. This applicant didn't include arrows, it was just the photo numbers, which is somewhat helpful, but the arrows really do help, especially for the interior photos, to know which direction each one is facing. And then the plans don't have to be professionally drawn. They don't have to be to scale. They don't have to be terribly detailed. It can be just a simple line diagram, as long as we can understand where in the building the photos are looking. The Part 2 application is called the Rehabilitation Plan, and this is where you describe the condition of your property and the proposed work. If you are a commercial applicant, we do request that you include a state equalized value form. This is a verification of your state equalized value so that we can ensure that you are meeting that 10% threshold to be considered a substantial project. We ask for the estimated cost of rehabilitation and the estimated construction and start and end dates. These are just estimates, but it's helpful to have as accurate of an estimate cost as possible, because that is what we will base the amount of your credit on. Again, we're asking for before photographs of all work areas. And these photos should be more detailed, showing the deteriorated conditions and character defining features of each of the spaces where work is proposed. And then if you are using that 1-year reach back to include prior completed work, we ask that you include before and after photographs of that work. So we want to see photographs before any work started, and then we want to see photographs of where the property stands right now when you submit your application. Another photo key plan, like I just went over. And then We understand that projects do change, that you might not have 100% of the information when you're submitting your application. So there will be the opportunity to submit amendments after your Part 2 application if there are changes or if additional information becomes available. So it doesn't have to be 100% complete, but it has to be complete enough so that we can review it against the standards and say, yes, this looks like it will comply. The application form looks pretty similar to the Part 1, some of the same information, but I want to highlight this section here. This is where if you're using that 1-year reach back, you would break out that prior completed work. So the information on when that work started and ended and the portion of the expenses that are attributed to the prior completed work. And then this line right here, your estimated qualified rehabilitation expenses. This is the amount that we base your 25% credit on. So it helps to be as accurate as possible for that. Page 2, we ask you to fill out down to this line, and then from here down is what we will fill out after we've reviewed. And there's a section right here that says this project is awarded a priority number. Priority numbers will only be issued if we reach the cap for your category in a given year before we get to your application. So if for some reason we do allocate the full 2 million to small commercial or the full 1 million to owner occupied, your application will be given a priority number and for consideration for funds for the following year. And then right here is where we will indicate the credit amount for which you are pre-approved. And I want to note that because this is an estimated, because your qualified rehabilitation expenses is an estimate, that the final credits cannot exceed 25% of your actual qualified rehabilitation expenses. So for some reason, if you spend less than what you estimated, you can only take up to 25% of what you actually spent, or the credit amount that's listed here, whichever is smaller. If your qualified rehabilitation expenses go over the amount that you estimated on your application, there is a provision for asking for additional credits under the Part 3 application, and I will go into more detail when we get to that. All right, so this is where most of the information for your Part 2 application goes. This is where you will describe each feature of your project and the proposed work that will be done. When you describe your existing features, I would suggest that you break into categories based on systems. So if you're looking at the exterior of your house, break it into roof and then siding and or masonry repair, window restoration, categories like that. And then you can describe the existing material, describe any character defining features, and talk about the condition. If there's been any modifications over time to these features or systems, please describe them here. And then when you're describing your proposed work, please talk about any materials or methods that are being used, any products that you have information for, if you know the brands of window replacement windows you're proposing to use, or if you're using a chemical cleaning agent, like in this example, please include that data, that product data, with your application so that we can see what kinds of products you are using. If you have drawings of any kind, that is useful to submit also, especially if you have drawings of before the work or demolition drawings, so that we can compare them to the new work and proposed drawings to see if you're relocating walls or changing openings, something of that nature. It's very helpful for us to see that in the before and after plans. All right, so application review. Applications are reviewed in the order in which they are received. So because there are limited funds available for each category in a calendar year, the fair way that it was established in the rules is that applications are just reviewed in order that they're received. And that until the credits are all pre-approved. If we need additional information to review your application, or if something needs to be revised on your application will be put on hold, and other applications can be reviewed and advanced toward credit allocation while we're waiting for that additional information from you. So it is to your advantage to submit the most complete package that you can. You may only have one open Part 2 application per property at a time. So, when you're submitting an application, think about all the work that you'd like to do within the course of a year or two to include that all in one application. Because if you do a project early in the year and submit an application for us, and then later in the year, you decide to do another application, but the first application has not been fully closed out yet, you can't add that work to this application. Credits are awarded on a first come, first served basis. So again, it's all in the order that's in which it's received. And then please note that Part 2 is a pre-approval. The credits cannot be claimed on your taxes until after the Part 3 Certificate of Completed Rehabilitation is issued. So you need to complete all of your construction project work and submit the Part 3 application before you can claim any credits on your taxes. There are a number of dates that are listed in the legislation and in the rules. So I've created this diagram here to try and make it a little easier to understand. Most of it is hinging on the date of your Part 2 pre-approval. So when you've received that Part 2 pre-approval, that's when we look at what your 1 year reach back for your prior completed work from that date. And you are also required to begin construction within 1 year of that date. So if you don't have any prior completed work and you submit your application before you start your project, you must start your project within 1 year of that Part 2 pre-approval. If not, the pre-approval can be rescinded. You have up to 8 years to complete your project, to complete the work that you have proposed in your application. That's reduced to 7 years if you're using the 1 year reach back. And then once your project is fully complete, you have up to 1 year to submit your Part 3 application. So please do not delay in submitting those Part 3 applications. I wouldn't want you to time out of the application process, because if you do not submit that Part 3 within 1 year, again, the pre-approved credits can be rescinded. All right, the Part 3 application is just to show us that the completed rehabilitation does conform to the Secretary of the Interior standards, and it is done the way that you said it was going to be done in the Part 2. We do ask for photographs of all completed work, and it helps if the photographs somewhat mimic the before photographs so that we can see the comparison. We can say, oh yes, I see the damage that was here before, and I see how you repaired it, and that the details, the historic details are retained and matched. We ask for another photo key plan so that we can understand where those after photos are taken. Like I said, sometimes the renovation is so drastic that it's not easy to tell from the after pictures which direction they were facing or which before pictures they correspond to. We will ask for the names and social security numbers or tax ID numbers of all the parties that are claiming the credits. I believe I mentioned on one of the early slides that the credits can be assigned to other parties. So if you are doing that, then you would submit that information along with your Part 3 application. We do have an assignment form that you can submit if you are assigning your credits to somebody else. There is a section of economic data that is requested on the Part 3 application, and I'll show you a little more detail on that on the next slide. And here's where I said, if your qualified rehabilitation expenses went up above and beyond what you had estimated in your Part 2, you may request additional credits here with your Part 3. Additional credits will be reviewed if funds are available at the end of the calendar year. So we will hold your Part 3 application until December. And after all of the other applications have been reviewed that year, if there are still credits available, then we will look at approving your request for additional credits. If there are no additional credits available at the end of the year, then you will still be approved as long as your application is approvable in all other manner, that your original request for credits, your pre-approved amount can still be approved. It would just be the extra credits that would not be approved if the funds have already been expended for the year. Part 3 application looks pretty similar again to the other parts. Here is where the project economic data is. And these are things we do recommend that you discuss with your contractors so that they can help you track some of this information in terms of the labor hours that were generated, the number of jobs they may have added, payroll added, sales tax and income tax that are generated by the project. Those are all things your contractor should be able to help you ascertain. For the property value before and after rehabilitation, you may not have an appraisal for your property, and we don't require that you get a formal appraisal. What we suggest is that you look at a tax bill from before your rehabilitation and a tax bill after your rehabilitation, and use the state equalized value that's listed on your tax bills to determine this property value before and after rehabilitation if you do not have a formal appraisal. This is page 2 of the Part 3 application. This is the part that needs to be signed before you can claim your credits. So please do submit and obtain a completed certified Part 3 application before you attempt to claim the credits on your taxes. I did mention that there were fees, application fees associated with each part of the application. If you are a residential property, the Part 1 is a flat fee of $50. There is a fee for Part 2 and for Part 3, and those fees are calculated the same way. For projects under $20,000 in qualified rehabilitation expenses, your fee is a flat fee of $100. If your qualified rehabilitation expenses are over $20,000, then your fee is determined as 2% of your anticipated credit. And I'll go over an example of how to calculate this on the next slide. For commercial projects, the Part 1 application is a flat fee of $100, and the Part 2 and Part 3 fees are calculated similarly. If you are under the $40,000 threshold, it's a $200 flat fee. If you're over the $40,000 threshold, it's 2% of your anticipated credit. So what that means is your qualified rehabilitation expenses times 25% will tell you the amount of credit that you're eligible for. So if your project is $30,000 in qualified rehabilitation expenses, 25% of that would be your credit amount of $7,500. And then to determine your fee, we take your credit amount times 2%, and that is the amount of your fee. So your $7,500 credit times 2% would be a $150 application fee for your Part 2, and then also another $150 application fee for your Part 3. Submitting your application. So if there are any applicants out there, any 2022 or 2023 who are still in the application process, we ask that you use the forms that were issued to you by email. For new 2024 applicants, The Part 1 applications will be available on our website. We are currently updating that for the upcoming year, so look to find that next week. And as I mentioned earlier, we will only be accepting residential applications and small commercial applications with under $2 million in qualified rehabilitation expenses. We do ask for one hard copy of the application form and all application supplemental materials, and then one digital copy that is put on a USB drive and mailed to us. The application forms do need a wet ink signature. Each application part must include a check or money order with your fee. And then the applications must be submitted by courier so that we can track the date and time on which they are received, so that we can maintain that order, so that we can review everybody on that first come, first served basis. Let's see. And then after you have gone through the whole process, after you have received your Part 3 certificate of completed rehabilitation, that is when you can assign credits to other parties if you are looking to do so. You can begin claiming your credits, and you must begin claiming your credits within 5 years of receiving that Part 3 certificate. This is a tax credit, and the credit is not refundable. So if your tax credit exceeds your tax liability for a given year, you don't get the extra back in a big fat check. However, those credits can be carried forward for up to 10 years. So if your credits are more than you owe in one tax year, you may carry them forward for up to 10 years or until they are fully used. The Part 3 certificate of completed rehabilitation also starts a 5-year compliance period, during which your property is expected to maintain its status as a historic resource. And if you are looking to sell or transfer that property at any time during those 5 years, please do contact us. There are some additional requirements if you sell or transfer the property to ensure that it does remain a historic resource under its new ownership. If either of these are violated within those 5 years, then the credit may be revoked. And it's a kind of a sliding scale of percentage based on how many years you've been claiming the credit is the percentage that could be revoked. And then after you have this Part 3 certificate of completed rehabilitation, that is when your application is fully closed out, and you can start thinking about your next project and your next application, submitting a new application for new work. One thing I want to really strongly encourage that I didn't mention earlier is that you do submit applications prior to beginning any work. It's not a requirement, but it is highly, highly recommended. And this is because if any of the work that you're doing it is not in compliance with the Secretary of the Interior standards, this gives us an opportunity to work with you to find a solution that does comply with the standards before you start doing any work. It is much more difficult and expensive to make those changes if you have already gone and done work that is found to not be in compliance with the standards. So while you can utilize the 1-year reach back for prior completed work, and you can begin work before you get that approved Part 2, I strongly, strongly encourage you to submit your applications and get approval before you start your project. All right, and with that, I want to highlight that our 2024 applications, we will begin accepting those on January 2nd of 2024. Please do not send your applications before that date. We will begin accepting them on January 2nd. And with that, I'd like to point out the couple of links down here to the State Historic Preservation Office website, to the specific tax credit page link here, where you can find lots of information There's frequently asked questions, the instructions document, and the application forms will all be available here at that link. And then I mentioned the Secretary of the Interior standards for rehabilitation, and those can be found here at the nps.gov website. And I see that we do have some Q&A in the chat box, so I am available to answer questions.
Hey, we have a lot of questions. Let's see if we can go through them. Okay, first question. Oh, is the application form available now online, or is it going to be available on January 2nd?
We are currently looking to revise the Part 1 application just to update it for this coming year. So as of today, it is not up, but look next week and the Part 1 application should be available next week.
Hey, thanks. Next question. Are interior photos required for an exterior residential project?
For the Part 1 application, we do ask for a few typical interior photos just to help establish the character and the integrity of the property. But if your project is completely exterior, then for the Part 2 and the Part 3, we would only need photos of the areas where you are doing project work. Keep in mind that there are some aspects of a project that are both interior and exterior. So if you are restoring windows or replacing doors, things like that, we would want both interior and exterior photos of those features. And even for things like if you're replacing a roof, you may have had water damage at the interior, and showing photos of that water damage helps us to understand the necessity of replacing a roof versus repairing it. So we do ask for interior photos for situations such as that.
Okay. Okay, one question about will the slides be available after the webinar?
My understanding is that the webinar is being recorded and that the recording will be posted and available for participants and the general public to view.
Or is this person asking if they can get a copy of your slides?
Why don't you reach out to me and we can talk about that.
Okay. Hey, and just a reminder to everybody, if you have any question, please type them into the Q&A box, not the chat box, just to make sure we can see them. Okay, so next question. Are the applicants required to submit digital photos and hard copy photos, or just one or another?
Both, yes. We are currently requesting one hard copy of photos and of all the application materials. So one hard copy of all application materials and one digital copy of all application materials.
Okay. So as a residential applicant, do you think they will be able to complete the application themselves, or is it something that they have to hire a consultant for?
You do not need to hire a consultant. I know that the forms can look a bit daunting, but I'm here as a resource to help answer questions and to help you through the process. And the instructions document does walk through each item line by line and provide a good description of what information is needed. It also depends on the complexity of your project. You know, if you're applying for just a roof replacement and it's one item that, you know, may be easier for an individual to fill out an application for, versus if you have a large commercial building that is going under a complete rehabilitation, that may be something you might consider engaging a consultant for, but certainly it's not a requirement to have a consultant.
Okay. Next question. So the Part 2 and Part 3 applications, somebody was saying they don't see it online. So will they be provided after Part 1 was reviewed and approved?
Correct, yes. So the Part 1 application is the only application that will be available online. And then once that's reviewed and approved, we will issue you a Part 2 application form. However, the instructions document that is on our website does go through all 3 application parts. So you can read the full instructions document and understand what will be expected in those Part 2 and Part 3 applications.
Next question. Are there any samples of completed applications?
We do not have any of those published, and I'm not sure if we are able to do so or not without violating privacy. However, the instructions manual does have some sample descriptions of the sections of the application that require writing, such as the description of rehabilitation work or the statement of significance. So there are examples in the instructions document.
Okay, next question. So if somebody is using a building as their own residence and income producing, so part of the building is income producing and part of it is their own residence, how is it going to be a residential tax credit or?
Oh, unfortunately, because the way the rules are written right now, the categories define residential as a owner occupied property that is not income producing. And they define a commercial property as one that is income producing, but not owner occupied. So unfortunately, at this time, we are not able to accept applications from properties that are both owner occupied and income producing.
Okay. Next question. So if the homeowner is working on their home themselves, will their labor be able to be reported as part of the costs?
No. So if you are self-performing work, then your labor is not able to be included as a qualified rehabilitation expense. And I would refer you to your accountant and tax professional on that. And the IRS has a document published about qualified rehabilitation expenses. So there's more information on that there.
Okay, next question. For large commercial properties, is syndication allowed?
So you are allowed to assign the credits to other entities. So I think that's what they mean by syndication. That is allowed. If you are doing that, it must be submitted with your Part 3 application. So you have to have the information of who you are going to be assigning those credits to when you submit your Part 3 application.
Next question. Applications are reviewed first come, first serve. So how do you determine the order? What's your rules?
So that is why we request that all applications be submitted by courier with a tracking number on them. That way we can track exactly when the package was delivered, so date and time stamped. And that is how we determine the order for review. And that's the initial order. And then if we need clarification or additional information, and we put that application on hold until the new information is received. And then that is also date and time stamped, whether it's submitted by courier or if it's something that can be answered by email. Either way, we have a date and time stamp on when that additional information is received. And that application is then placed back into the review queue based on the date and time of that additional information.
Okay, next question. So if the tax credit can't be assigned, does that mean a nonprofit can make arrangements with a for-profit entity to allow the for-profit entity to collect those tax credits?
Yes, that does seem to be a possibility, but again, I am not a tax professional, so please consult your accountants and tax professionals to verify that that is applicable to your situation.
Okay. Okay, let's see. So can you talk about the 1 year look back timing for work that is largely completed?
Yes, so the rules allow for a reach back of 1 year from when your Part 2 application is submitted. So any work that is completed within the 12 months prior to submitting your Part 2 application, that work can be submitted on the same application as future proposed work, or it can be submitted as a standalone project. If you only have that prior completed work, you can submit an application just for that, or you can submit an application that includes prior completed work and future proposed work. Keeping in mind that any prior completed work, if it's found that that work does not comply with the Secretary of the Interior standards, that you may be asked to make some changes to bring it into compliance. Or if you're not able to make changes, if it's not able to be brought into compliance, then your entire application could be denied. We do review the applications. We review the project as a whole project. So if any aspect of the project does not comply with the standards, then we do deny the entire application.
Okay. Next question. So if somebody's combining the federal tax credits with the state tax credit, is it 25% plus 25% or a 20? Is it additional 25% or additional
Right. So the amount of the credit does not adjust if you're claiming both the state and the federal tax credits. You would get the 25% on your state income tax credit or income taxes, and then you would claim the 20% on your federal.
Hey. Can you have multiple projects or applications on different properties at the same time?
Yes, yes, you may. You can only have one application open per property at a time. But if you own multiple commercial properties, for example, or if you own your own private residence and a separate commercial property, you can have multiple applications open at one time for different properties.
Okay, next question. Is exterior and interior painting considered rehabilitation?
Yes.
Okay.
And that is one area I should highlight how the review for this may be different from the review you go through for your local historic district commission. Often the local ordinances are really focused on the exterior appearance or the appearance from the street, while the tax credit application does look at the whole project. So we are looking at the interior historic features as well as the exterior.
Okay. So would it be possible to give a few examples of work that is not covered? Is not eligible for a resident?
Sure. So let's say that you have a commercial property, a 3-story commercial property that historically only had stairs inside, and you wanted to add an elevator to that. If you are adding that elevator as an exterior addition to the project, then the cost of that addition is not typically considered a qualified rehabilitation expense because that's an addition. If you're building a new garage on your property, that's typically not considered a qualified rehabilitation expense. If you're putting in a new driveway or putting up a new fence around your property, unless you can document that your driveway was part of the character defining historic feature of your property, which I have seen that happen in very, very few cases, But if your house had a historic landscape or a historic paved walkway, those may be eligible, but typically any work that's done outside of the footprint of the historic property, of the historic building, anything outside of the footprint is not typically a qualified rehabilitation expense.
Okay. So in order to apply for a residential tax credit, does it have to be somebody's primary residence, or can a second home be eligible?
We do not have that defined. So as long as it is owner occupied residential, and it's not being used as an income producing property in the time when it's not occupied by the owner, then it appears to be eligible for the residential category.
Okay. Okay, so we are running out of time, but we still have a lot of questions. I don't think we are able to cover all of them today,
Sure.
but Mara has her contact information on the screen, and you also will receive an email when the recording is available. So that email will come from me. If you have any questions and can't find Mara's email address, just let me know. But we do
Yes.
have to stop here today. And thank you so much, Mara, for your time and knowledge. And this is a great presentation, very, very useful. I hope everybody have learned a lot today. And I just want to quickly announce our next webinar, which is scheduled for, just bear with me for a second. So it'll be after the new year. It'll be our first webinar for 2024. It's the phase 1 restoration of the 1876 Vermilion U.S. Life-Saving Station building. And this webinar is scheduled for January 25th, and hope to see you all that time. And everybody, happy holidays, and see you after the new year. Thank you, Mara.
Thank you. And please do reach out with any questions at all. I'm happy to help.